Assalamu alaikum everyone. My name is Muhammad Faizan and I am a mechanical engineer by profession and currently I am designated at the T5 hydropower project and currently doing my masters from the GIK Institute. Today we are going to analyze the Big Bird Foods Limited case study. The topic we have studied in the industrial accounting and finance subject and we are going to apply those topics into our case study. We will apply industrial costing principles to the 2025 annual report of the Big Bird Food Limited, which we have downloaded it from their official website. So uh, let's look at the overview of the industry. Let's go to the next slide. Okay, let's look at the overview of the industry which we'll be studying. Big Bird. Big Bird is a giant in Pakistan's poultry sector, as I've written over here, that it is a high stake FMCG sector. FMCG means fast moving consumer goods sector, uh, which it includes everyday non durable products that sell quickly. Uh, as I've written over here, that Big Bird Food manages the entire supply chain from farming to waterless air chilling lines. Uh, but the defining factor over here is the biological factor. अनलाइक अ कार फैक्ट्री जहाँ पे रॉ मटेरियल जो होते हैं वो पड़े रहते हैं और उनको ख़राब होने का इतना मसला नहीं होता इन फॉर अ फॉर a sector like this, the growth rates, mortality, and climate factors make industrial costing a dynamic, real-time challenge. Okay, so now coming to the financial concepts to understand their reports, we use two tools: the balance sheet, which is a snapshot of financial health at a specific point in time. It details assets, what we own, liabilities, what we owe, and equity, the owner's stake. Whatever you have, uh, whatever you are getting affected by the other, your partner, whoever has stakes in your company, you will also get affected. तो एप्लीकेशन क्या है इसकी? एसेट्स जो हैं, लाइबिलिटीज और इक्विटी का जमा है। इनकम स्टेटमेंट क्या होती है, ये हम ऑलरेडी स्टडी कर चुके हैं। फॉर परफॉर्मेंस रिकॉर्ड ओवर अ पीरियड, इट कुड बी ईयरली और इट कुड बाय एनुअल. It starts with the revenue and subtracts all manufacturing and operating costs to find net profit. So it is actually critical for measuring the margin of safety. So looking at the 2025 annual report, uh, all of this data has been extracted from their annual report of 2025, and Big Bird actually saw a massive 58% growth in sales, as you can see over here from the chart. Uh, it jumped from 7.2 billion to 11.3 billion it in from 2024 to 2025. We should keep in mind that their official licensed partner chicken supplier are KFC. KFC जैसे आपको पता है कि सबसे profitable fast food chain है पाकिस्तान में. तकरीबन सालाना, as I've checked from the internet and from other sources, they have an yearly uh, sales of around 14,000 crores, which equates to around 140 अरब की सेल है. तो Big Bird इनके suppliers, so you can get the idea. Their profit after tax also climbed 39% to 1.16 billion rupees. This is actually a staggering top line performance in a very tough economy. Let's look at their financial position. Their balance sheet grew to 12.4 billion rupees. Notably, they hold 254.7 million in biological assets. Biological assets, they include live flocks currently on the farm. Uh, they have very high equity ratio of 63%, which shows that they are very solvent. It means in um, financial terms, being solvent means a company is in excellent long-term financial health, and if they have any debt, they can easily pay off these long-term debts. So That means they have a very high stakeholder trust as well. So now coming into this slide is telling us about the cost classification. Uh, as we have studied before that we divided cost into product cost, which is direct material, labor, and factory overhead, and then period cost, marketing, admin, and financial cost. So their product cost, as you can see, the direct materials are their feed, their chickens, their direct labor are their line workers, and manufacturing overhead is their uh, chilling power. Chilling power actually means that they need high amount of electricity for their chillers to be turned on at all the time. Their period costs are like the marketing costs and then salaries and then interest on loans. Okay, now coming to the cost of goods breakdown slide. The cost of goods sold accounts for around like 69%, 79% of revenue, sorry. In a tight margin sector, every percentage point of cost saved is direct profit. Uh, they consumed over like 5 billion in feed and 1.9 billion strictly in biological assets. As you can see, this table over here, this tells a lot. This proves the reality of commodity volatility. Global maize and soybean prices directly dictate like Big Bird's profitability. Uh, if we if you want to explain this slide, काफी important slide है क्योंकि it reveals exactly where the company's money is going before any gross profit is realized. Out of their 11.36 billion, this 11.36 billion which I'm quoting right now, uh, you can see this figure from the page 45 of their financial statement, uh, which we are studying right now. Big Bird spent 8.98 billion just to produce the goods out of their 11.36. Uh, let's explain it like what about the raw material? Raw material is the largest expense, representing over half of the total production cost. In the poultry industry, raw material primarily means poultry feed, uh, like the maize, the soybean meal, vitamins, and vaccines, वगैरह वगैरह. And the biological consumption, this represent the cost of the live birds themselves, the uh, the chickens that were raised and eventually processed. Why the power is so high? Because operating state-of-the-art facilities that slaughters and process up to 2 lakh birds a day requires heavy automated machinery. Not only that, more importantly, their waterless air chilling technology and massive cold storage warehouses require immense continuous power to maintain sub-zero temperatures. Uh, this PKR 845 million is a massive manufacturing overhead because much of this power is fixed cost. Freezers actually they must stay on regardless of how many chickens are inside. So the what is the key takeaway from this slide? Main point over here is volatility. Textbook accounting problems like what we have studied, they often provide neat, stable numbers for direct materials. This background proves that in real world, fast-moving cost good and agriculture manufacturing, they must constantly adjust their budgets and break-even calculations to survive the unpredictability of living assets and global energy prices. Right is now telling us about the cost and behavior. Cost flows from raw material to work in process and finally finished goods, frozen inventory. We also track behavior uh, like whether feed is variable, plant depreciation is fixed, and energy is mixed. Uh, so, coming to the next slide, uh, big birds can use activity-based costing. they don't use uh, one overhead rate. They track unit level cost, packaging, then batch level cost, cleaning machines between nugget runs, and facility level cost. Uh, Instead of a single overhead rate, as I've said, Big Bird applies cost based on the activities that actually drive them. Over here, you can say uh, yeah, we have um, the CVP and sales mix. Because margins are tight, management use cost volume profit analysis. They improve their sales mix by pushing value-added items like ready-to-cook nuggets and filet. These have a higher contribution margin ratio, allowing the company to reach its break-even point with fewer sales dollars. Okay, to cover the PKR 152 million in admin cost faster, Big Bird manipulates its sales mix. So, how do they manage high power costs? Uh, Through capital budgeting. The management used mm, net present value and internal rate of return to approve a 3 megawatt solar project. Uh, these NPV and IRR, these are the two most critical tools in capital budgeting, as we have studied before. Uh, they help actually management decide if a massive long-term capital investment like over here is actually going to be profitable over its lifespan or not. Just like whenever like nowadays you are installing a solar power plant in uh, in your house. It is a very high investment, but you will kind of like you already calculated that because of the higher cost of electricity in the longer term, it will be very profitable for me. So, management used capital budgeting to approve a 3 megawatt solar plant set for 2020, 26. It targets a 40% reduction in grid power needs because, as we have like studied before, power cost, they have a very high power cost. So, to tackle that, they have mm, uh, uh, used the capital budgeting to approve a 3 megawatt solar power plant. So, a management decision to install a 3 megawatt solar plant is a direct strategic move to slash the specific line item and probably lower their fixed cost. There were other strategic agreement with the Alibaba to expand into the international business to business halal meat markets, and then utilization gap was only 29% capacity was used. Uh, there is a massive room to scale using solar power. To conclude, theory assumes static cost and clear line, but the cold chain logistics blur the line at the big bird. So maintaining sub-zero temperature during transport is functionally part of the manufacturing process. In a nutshell, you can say that theory provides the bones, but operational agility, which are the hedging feed prices, biological risk management, they provide the muscle for big birds, 58% growth. So, again, to put it in a nutshell, their success lies in bridging academic frameworks with operational agility. So, that concludes my presentation. Thank you for your time. Uh, Big Bird proves that industrial costing is the ultimate strategic engine of manufacturing. I'm now open to any questions. If you have any question, feel free to comment down below, and I will try my best to answer each and every one. Thank you very much. This was my presentation. My name is Muhammad Faizan, and my registration number is EM-2528. Thank you very much.